Hello, Kevin Barry here from irishseafarerstax.ie. We're accountants and we file tax returns and advise on tax affairs for seafarers, be they on oil tankers, super yachts, ferries back and over, divers, that type of thing. Ideally, we're for Irish people who are abroad or people who are based in Ireland, even if they're not Irish in the first place. Okay, so in the next 30 minutes, I'm going to run through the 2022/2023 situation. If you want to find some more out about us, if you put irishseafarerstax.ie into the internet, which, as Homer Simpson said, is that still around, you'll come up with this page. Okay, and if you give us details about yourself, what you're doing on this 2-minute seafarer questionnaire, we'll come back to you within 24 hours with your options based on what you're looking for. So we generally look for details of where you've been in the past, how many days you've been outside Ireland. It's pretty self-explanatory. And then perhaps if you want to go further, you can book a Zoom after that, which tends to be free. But if you want straightforward advice, you can book a consultation on Zoom as well. So check us out on LinkedIn and social media too. But really, that website has most of it. Okay, so what I'm going to do now is in the next few minutes is bring you through the plan here, and this is the update. So we've been doing this for many years, and sometimes we do in-person talks. Okay, so the resident versus non-resident seafarer, I'll just explain the difference there. Flight crew, this is not all about seafarers, just the key differences on that. If and when you need to file an Irish tax return, how to qualify for the Seafarer Allowance, and COVID-19 and the force majeure letter. Okay, let me just share the screen actually. So I'm zooming through these things. Zooming on Zoom. So those items I mentioned are there. Getting a mortgage is coming up an awful lot. Non-residency rules. Still going, but don't worry, it won't wear you out. When are training allowances taxable, when are they not? And the latest safeguards I reckon you should adopt. So we're going to kick off from there. So it's pretty forward. So that'll be the first one, about the resident versus the non-resident. The key thing is it's down to days and days in Ireland. And it goes on a January to December situation, not April to April like in the UK. Okay, so that's the plan. Now, hopefully it won't take 45. So I've just explained to you who we are and what we do, so you can look that up. But irishseafarerstax.ie, I don't know if that cross is there by accident, but that's our website, and it's down the bottom here as well. Okay. The other websites are on our LinkedIn, barryaccountants.ie, and you'll find us on Facebook also. And that's our free phone number at the bottom. Okay. So the key difference between the two is a resident seafarer, they pay their tax here in Ireland. They do get a bit of a discount on that if they're over 161 days at sea, but they need to be on an EU registered boat, and they need to have an Irish address. Okay. So that's the resident person. There's a days issue coming up, and I'll explain that in a minute. But a non-resident seafarer does not pay tax in Ireland. It means they're less than 139 days in Ireland on average every year. Okay, that's a key number. So you've got to be under 140 days on average, and the average is only a 2-year average. So under 280 days between this year and last year, this year and next year, keeps you non-resident. But you need to be working outside of Ireland for a foreign organisation and being paid from a foreign pay point. To reinforce that, I recommend you get paid into a foreign bank account as well. Okay, it's just reinforcement. That's not key. So the key thing is you don't pay tax here. You've got to be under 140 days a year. Now, when you're becoming non-resident, you've got to build up to that. Okay, so the first thing is, some people think if I'm out 6 months, I'm non-resident. That's over 20 years old, that rule. It's still there, but it's reinforced with this one. You also have to be out 450 days between this year and last year. So there's days flying at you here now. So in real terms, 226 days out this year plus 226 days out last year puts you at 452. You're over the 450 out. You're also over the 183 out. Okay. So keep it simple. Under 139 days each year in Ireland, you're non-resident. If you're caught with a look back rule, if you said I want to be non-resident in 2023, then be here less than 30 days. That's it. There's no looking back on the earlier years, whether you're over 6 months or not. Okay. So I'm going to flip it around now. So when I say be 226 out, a way to also put that is 451. So 226 plus 226 is 452, but I'm aiming at this 451. So you've got to be out 451 to be in less than 140. So 451 plus 139 is the two 365s put together. Okay. Every day counts, all right? So if you arrive at 11 o'clock at night into Ireland at the airport, you're here all day, okay? If you leave at 6 a.m. flying away, you're here all day. So all days count. So just to get back on it, a resident seafarer, they might be on a ferry, they might be on boats, but if they're here over 139 days in Ireland each year, they're going to pay their tax here, regardless of where they earn that money. Okay. Yeah, the other thing is, if you earn money here, so you're working with BP or someone like that abroad, and you've rent coming in here, there is tax on Irish income if it's coming from here, okay? So just think of it out loud, right? If you have a bank account here in Ireland, AIB, Irish Permanent, any of them, they have your name, address, 100 other things, but they also have your PPS number. And when there's money coming in from a non-Irish source, that's reported to the taxman. And if the PPS number that they see is connected to the bank account is filing a tax return, that generally they're happy enough, you're probably declaring everything right and they won't come near you, okay? So everyone should file a tax return because it explains where your money is coming from. That's it. Even if you're not paying tax here, if you're bringing money in and you're buying a house, or you're just keeping a family going or saving up, when you go to buy something with it, they're going to ask, where did that money come from? Prove it. And the tax return coming through someone like us, we've got on file your pay slips, the days out, who you worked for, your ID, that will prove it. So everyone has to file a tax return, really. The records to keep, to back that up, we give you a secure portal where you can upload scans of everything, okay? The discharge book, you know, it reinforces your day out of Ireland. Now, it's not all about work. And when I said all days count earlier, part of that was if you're on holiday for 2 weeks somewhere, you're also outside Ireland. If you're abroad for a wedding, a funeral, a stag, that's also outside Ireland. But the discharge book will corroborate a lot of that. Obviously, your passport, you know, pay slips, all them mostly on PDF now. Your contract, a great one. We like to see that there. It's just if there's ever any inquiry, the more we have on file, the less we have to bother you about it. Diary's no harm. You know, I have one myself right here. Just a glance back, kind of, you know, notes you would have kept. Receipts of any expenditure that you were not reimbursed for, such as training, such as flying from A to B, maybe doing some other interviews, anything like that. If you have a foreign address, good and well. It's great. It kind of backs up the fact you're not here. Being paid from a foreign location by a foreign employer is a huge one as well. It's the key thing, isn't it? Foreign bank account. Now, with the foreign bank account, we'll often get you to open a offshore account, be it Barclays, Lloyds, or Standard is another crowd in Isle of Man. Okay. If you're married, the husband and wife should file separately every time, no question. Otherwise, if you're jointly assessed here with a spouse, the question is, have you really emigrated? You know, and don't, by the way, if you are married and the wife is working here or the husband is working here separately, do not have them claim your personal allowances. Vital. Otherwise, you're gone. Every holiday is a business trip. Okay, it's, you know, it's days out, so that's what it is. Now, bad weather days. The ash cloud is one here. We recently had an Arctic blast, but if you come home to Ireland or meant to leave on a certain day, this is where the diary comes into it. But you're delayed over a weather issue, getting out, or something like that. Keep track of it, because they can be forgiven for being here. Comes up later in force majeure. This is a huge one as well. The Seafarer Allowance relates to resident seafarers. So if you're based in Ireland, they're paying tax here, you get an extra discount. If you're 161 days at sea, okay, you get an extra 2540 knocked off your tax bill. Okay, that's at the top right. Has to be an EU registered ship down. Okay. And yeah, going to a foreign port, can't just be sailing around the coast. Okay. Carrying passengers or cargo, and that's the key thing, 161. Also relates, funnily enough, it's a new one, fishermen get that as well. It's an extra tax credit. They don't get as much, but they get that. Okay. So this 6.3, what the Seafarer's Allowance gives you, it gives you that amount extra tax-free, but you multiply that by 40%, it saves you that figure just below it, 2,540. Yeah, and you can claim for medical expenses, pensions, and all that if you're resident here. Okay. Now we're getting more and more queries about mortgages. How do I get a mortgage? So they look for 3 years proof of income. Again, if you're filing the income tax return, we always declare on it your worldwide income. The taxable amount will be 0, but we declare what you earned, and we have to back up to that. So, that's what the bank want to see. They want to see 3 years of that, pay slips, money coming into an account, etc., etc. A letter from someone like me saying tax affairs are up to date. The bank statement showing the money coming in. I mentioned that. The more deposit you have, the less you borrow. The less you borrow, the quicker you're out of debt. Now, mortgage, I love this one. If you look at that word, break it in two. Mort is the French for debt, okay? And gauge or gag is like a dead weight. I think it's Latin for weight. So you go to debt weight, okay? So that's what a mortgage is. So the bigger this deposit, the less you have of that. And anyone who's dealt with getting a mortgage is heavy going, okay? But housing is the thing. Shorter the term, you can pay them off. We have a separate webinar on paying off your mortgage in 7 years. You also will need life assurance. And so if you drop dead, the mortgage is paid off and the house is cleared for whoever gets it afterwards. All right. So just when you're budgeting for your mortgage, you need to budget for that. The younger you are, the cheaper it is. Now, this is beginning to change. The banks were telling us a while back, when you're buying a house, they'll finance you your home. They weren't interested in new builds. I see that changing. I see that changing in recent times. So safeguards to be aware of, right? If the ship you're on, super yacht, tanker, comes to Ireland, if it's in the port and you don't leave the confines of the port and get your discharge book stamped, you're still at sea, okay? That's called the airside rule. The same as in the airport. If you land and don't come through immigration, you're still not in Ireland yet. So I've had people stay there past the midnight. So this guy in the port, they don't leave the confines of the port, they're fine. This midnight rule, I hear this, I'm out as long as I'm gone by midnight. That's an English rule, British rule, UK rule, doesn't apply to Ireland, okay? So if you're in Ireland at any stage during the day, you're here all day. Being gone at midnight does not save you. Just another trap to watch out if you're non-resident. Don't mix up the days. I'll get us to double check them for you. I've had people just trip themselves up on that, And yeah, and just remember what I said, like north of Ireland is out of Ireland. I know, regardless of your political view on it, for this, it's out of Ireland. But if you're in Balik in Fermanagh and you drive into Bundoran and buy some diesel and drive back to Balik, you've been in Ireland the whole day. That receipt will give you away, that tap on the card will give you away, okay? And we do watch that, so just be careful on that one. Anyone looking to start a pension, if you're non-resident in Ireland, you can't start a pension. So if you're going to start one, you've got to be resident when you start it. After that, just keep sending the money, you're fine. But if you're not paying tax abroad, you don't need to be saving to avoid tax. Like, don't use a pension to keep your tax down. You don't need to if you're not paying tax. But if you're here and you're paying tax and you want to start when you're resident, okay? Even with small money. Keep track of those bad weather days. Get some VHI. Don't believe the ones that tell you don't need health insurance. If you want to jump over the queue and get seen to, you need health insurance, all right? That's not up for debate. So, if you can get into the PRSI system while you're here, once you leave, we can apply for voluntary PRSI. So it's 500 flat fee per year, and you're in the system as opposed to not being in it, all right? And you're better off in than not in. So within 12 months of leaving Ireland, you can apply to be into this. But if you've gone over a year, these days they don't let you in. You've got to come back, become resident at least for a year, and then you can reapply. If you end up paying tax in a foreign jurisdiction, the way it works is the tax there is knocked off your tax bill here. That's if you're paying tax in Ireland. So let's just say you're Irish resident, you go over to, let's say it's just England, and you work away over there, you come back here, they'll hang on to the tax they took off you. The same money will be taxed here again in full, but the tax you've paid in England or in France or wherever will be deducted from your bill here, so you only pay a difference. But that tends to be the USC at least, okay? And if you paid PRSI in a different jurisdiction, you do not have to pay it here, you're already covered. Medical card, if you can get a foreign worker's medical card, ask about it when you're there, get it, okay? To be outside Ireland, apart from being the airside thing, 12 nautical miles. So anyone operating around Ireland, pulling it out to ports, they're not really at sea unless they're out that all the time. Offshore bank accounts, it's just reinforcement that you're non-resident. Look them up, Google it. So Lloyd's is one, Barclays is another, I mentioned Standard are over in, where the heck are they? Isle of Man. Yeah, and these bad weather day proofs, even if it's a newspaper article or an email from your job saying do not come because whatever we can't change because of COVID or anything like that. This is one that's huge, so during the COVID-19 thing, sorry, I come back to here. During COVID-19, there was a lot of crew changes that were cancelled. So people either couldn't get off or they couldn't get on. It led to many people being here in Ireland who couldn't get back out to sea. And what would normally happen is we'd show the proof of that, the email saying don't come, and these days will be forgiven. Now, guidance has come out from the Revenue Commissioner saying that these force majeures will only be allowed that when you could leave Ireland, it ends then. But there'll be a lot of claims on that, right? Because it's not, the issue wasn't when you could leave Ireland. The issue was what happens when you get to the other side. Was it a 2-week quarantine? Were they even doing the crew changes? So if you flew, where was there to fly to if they weren't going to let you on? So these are the type of issues that we'll probably have to deal with. But we are claiming force majeure where we feel it's justified. So that's generally justified when people either can't get back to the jobs they were going to for reasons outside their control. It could be illness here in Ireland. It could be war in some place. It's just stuff like that, case by case basis. But we do apply in, we do get most of them granted. I've had a few setbacks lately, which I'm not going to let go and we'll stick it out. But just keep evidence. If something messes you up and you've got to come back, keep that evidence there. We'll scan it, put it on the file. We'll try and get it cleared in advance, but basically, if not, we'll have to fight it out. But the more evidence we have, the better. Also, location, where were you? So if you say you were somewhere, this is where the discharge book comes in. But if you don't have a discharge book, get one. And if for some reason you can't have one, just to have proof you were somewhere, whether it's stamps on the passport or even photographs, anything at all that you think would be useful. Yeah, the Irish bank account, if you're foreign address, go for it. Now, I used to take in records through Dropbox and Google Drive, and now we send you a link and you upload them. It's better, straight into us. Okay. Just training allowance. There's a rumor going around, the training allowance is not taxable. I've checked it with consultants. It's taxable as earnings. So if any of you have been on a down there in Cork in the National Maritime College and you're paid for a few years, that's the same as wages. It's not all going to be taxable. There's a few quid owing and you don't want to be caught out about it. Okay. This other item about split year. So this is when generally people leave during the year. Now what happens is I might leave, now this is December, but we might leave say in March, and well actually I'll go forward a bit, right? We'll go, yeah, say you leave in March and you leave then, and there is your 280 days gone. So you're over the 183 gone, so that's fine. But between March of this year and the previous year, you're resident. So, but it can be taken from the date you left, you're non-resident, if in the following year, you're definitely non-resident. So it's a matter of adding up the days in year one and putting it with the days in year two to get to the 451. All right, that's the first thing. If you can't get to the 451 in year two, well then remember that 30-day look back rule, you might have to hit that. Okay, so, or maybe you won't get the split year treatment in the first section of the year. You might have to be resident all that year, but the following year you've built up. Okay, just be aware of that one as well. Guidance has come out that you're meant to tell the taxman before you leave that you're leaving, but it doesn't always work like that, because some people leave and then things work out well and they stay gone, and then we go back and tell. So we've queried this directly with Revenue and they've said just put it on the tax return. We've done that, but we tend to email them separately to say we're claiming split year relief this year, just to have it more official in there. Because you can deal with the other person that says, well, you didn't draw it to our attention. Well, we'll draw it to their attention. Don't worry. Yeah, UK waters, Ireland versus UK considerations. They only have the 183 days. We've got the two rules. If you have a medical card, and you're paying tax in Ireland, the USC that you pay is halved as long as your gross income is 60,000 or less. That's a newish angle. Yeah, so if you pay UK national insurance and you're resident here, these are for residents, then you get a kind of a discount here. Okay. There's a few samples we have. I mean, just this lady, Jane from Dublin, she used to work for this crowd on that amount per year. She moved to the Caymans a few years ago, I know, but she did it, and no intention of returning. Less than 30 days here. That's how much tax she saved that year, 14,000. Okay. And Mike, that time in Kilkenny, he was month on, month off, earning 45,000. Early enough guy in his career, as well on now. So he was over the 183 days here. We were able to claim the Seafarer Allowance because the BP was in the EU that time, that ship. Okay. But he still had a tax bill, 11,577, but not as bad as it would have been. All right. So this lady came back after that. But split year was the issue here, you know. So we claimed that coming in, it really reduced her tax bill. This other lady, though, was on like making good money here as an engineer on an exploration vessel, month on, month off, paying huge tax, okay, in her personal capacity. But she formed a limited company. She took home less, left the rest of the money in the company, but effectively her tax bill came down by 43,500. Okay, but that company thing only works really if you're leaving money behind. Okay, it's not no good if you just take it through the company and take it all out as wages. It's the same thing. You're just costing yourself money with people like me. Another trap to avoid if you're non-resident is not filing for the 3 years. You know, when you leave, you're meant to file for the next 3 years anyway. They don't seem to enforce it. Most people don't even know that, but that's it. But you know, just to be, if you hear about it, at least you know. On the seafarer front, non-resident seafarers, the key with them is they work abroad, they get paid from abroad, and there's nothing performed here in the country. Okay, now the spouse here though can still receive the children's allowance, etc., 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 but they must file separate tax returns. Yeah, the flight crew, I kind of zipped over that. It's all about where they grew up in their centre of being, really, you know. But effectively, if you earn money in Ireland, you pay tax here. Okay, so yeah, forced me all used to do that. These are our typical fees. They've gone up slightly. Well, these are that's them actually. So the first year, these include VAT, and the reason the first year is dear is because we have to go back and look at the earlier years and look at the track record and build up a historical file. Once that's done, we don't do it the next year. So that's why it comes down and we hold at that. And then there's advance payment discount. You'll see them on our website. And if you pay within 10 days of finish, there's another discount. If you pay us before we start, that's twice as much. But you pay us over time. So we have two ways that reduce the fees and one that makes it slightly dearer. Okay. So plan your days out, keep the records, educate yourself, keep an eye on this website. And if you want to drop us a question, feel free. So I hope you got something out of that. I really wanted to keep it miles under 45 minutes and I did that. So hope all is well. Enjoy Christmas and see you in 23.